Well, Bitcoin gets a bad press, but it is the top performing asset class in the world for 2023 so far, up 57%. The next best is NASDAQ at 40%. So, but last year, of course, Bitcoin was down 64 and NASDAQ was down 33. So it is volatile, but on the other hand, traders love it. And there are some huge fans, including members of the BizNews community. Earle Loxton, this is his game. He's the chief executive of EasyCrypto. He's going to give us some understanding of why the volatility continues and indeed what's likely to happen in the crypto markets for the rest of the year and looking into next. Well, those are quite staggering numbers if you have a look at it. Last year, Bitcoin down 64, call it almost 2/3. This year, it regained all of that ground, up 57%. That volatility is something that I guess people who invest in Bitcoin just have to get used to. You buy it if you're a buy to hold investor on reasons other than trying to make a quick buck. But I guess it would also attract quite a lot of traders, given that there's so much volatility.
Absolutely. Yeah. Hi, Alec. For sure. Look, it's since the start of Bitcoin, the birth of Bitcoin in 2008. This has been the cycle, or this has been the pattern. Volatility has always been part of the narrative. There's a lot of traders and investors are still learning what crypto and Bitcoin is all about, and they get frightened very quickly. There's a lot of momentum that suddenly picks up. But I often say, it's a little bit like having glasses on a tray. They move around slightly when you tilt it, but at some point they start sliding, and then all of them just fall off the tray at some point. So I think there's a lot of that hysterics sometimes, if you want to call it that. Easily frightened investors. So I think that what we see here is just the craziest asset, and typically the behavior that goes around with it, i.e. clients are just, or investors are just easily spooked. The tiniest bit of bad news and you'll see a mass exodus, and then those investors will come back again. But from where I sit, these are the things moving or creating this amazing volatility. Obviously, it's good for the traders when you time it well. Those guys who buy the dips, sell at the highs, they do quite well with this volatility.
But as someone who believes in the story, in the cryptocurrency story, I guess you need to time your entry well. How did you time your entry into this whole market? What pulled you into it?
Well, my entry was let me rather say this. The first time I got wind of Bitcoin was only in 2016. And 2016 was right at the latter part of a bull cycle. So it was about to take off. It was pretty much on the high side. Got to know of it. I mean, obviously missed most of the previous cycles. But having not really understanding or being convinced of this, call it the cyclicality or the cyclicity of Bitcoin, my position was, this is just going to continue going up. So I had no timing at all. I bought close to the top in 2016. Obviously, 2017 was that massive run when it went all the way to $20,000. And then after 2017, it just crashed again from 20,000 down to 1,000, 3,000, about 3,500 again. Now, I in terms of timing, I'm a big believer of the 4-year cycle of Bitcoin. So what we've seen so far, and it's only been, let's say, 3 full cycles since 2008, is that every 4 years, there's a run. There's a bull run. So this bull run cycle repeats itself every 4 years. The first one was in 2012, following that, 2016, and now we had another one in 2020. And the best theory for this is obviously the halving. So the halving cycle is effectively baked into the code of Bitcoin, is that every so many blocks of confirmation, there's a halving event, which only means that the amount of Bitcoin that's released in that process in each block to, let's say, be distributed to the miners, that rate gets halved every 4 years. So every 4 years, going from 50 it went to 25, from 25, 12 and a half, 6 and a quarter. So the next halving is in 2024, and then it'll drop to 3 and an eighth every block. So that's just, it's just half the quantity of Bitcoin that gets distributed into the network. That's the only way that Bitcoin gets into the world is it's burst in a block every 10 minutes. So this creates scarcity, and when, this is the theory, is that people realize every 4 years there's this supply shock. So where suddenly everyone wakes up and says, oh goodness, Bitcoin's running out, the amount of Bitcoin is finite, there will only be 21 million Bitcoin, and each time there's a halving, that rate just drops again. And so historically, what we've seen is every 15, 18 months after the halving, it peaks. So at the halving, people start waking up and the market starts running, and then it boils over, and then 18 months later it peaks, and then it crashes again. So we've seen spectacular crashes, after these ridiculous runs all the way to the top. So in terms of timing, my short answer is, I think you should time the market, if you could, somewhere around where we are at the moment, which is the recovery, the sideways market after the previous run. And then if you want to take profit, I suppose it would be after the peak. And the peak, if you trust this and the history, would be at the end of 2025. So
that's some interesting, very interesting insights that you've given us there. But the price, I suppose the right time now, with hindsight, to have bought would have been last year, when Bitcoin really was on its knees. It's done very well so far this year, but generally speaking, you say sideways. That's on a longer term basis, I guess, that it hasn't really been testing those highs of previous cycles.
Yeah. So the last drop, the dip in the cycle was $16,000. That was somewhere in November, December last year. And then we've had this, this year we've had this 50% run. But things have been going a little bit sideways, I'd say, the last 2-3 months. And this is mostly because of the outsized effect that the US still has over the, worldwide markets, all markets, including crypto markets. So I think what we're seeing this year, apart from the point that the fact that we had a good run, is currently we are definitely seeing this sideways movement, which is just, it's just typical of the cycle. So, again, in a 4-year cycle, with three months of sideways movement is probably not really relevant, but it is still something to observe. So we are definitely looking at the market and saying, well, what is causing us? Not that we are taking any action to it, because it's completely out of our control, but it just gives you a little bit of comfort to at least have a theory or think to understand what is causing it. And what we are definitely seeing is there's a little bit of nervousness on the sides of the SEC at this stage. They've taken it upon themselves. I suppose they are the body that has to look out for the US investors, and they are they've taken a very harsh stance on crypto. They've taken quite a few companies to court in the US, Binance, Coinbase. And it's either because of accusing them of selling securities, and there's been a massive debate of what is a security. Is Bitcoin a security? At least Bitcoin's never been a security. Everyone's agreed that Bitcoin is not a security, but is Ether a security? And what about all the, the smaller coins? So there's been quite a bit of mudslinging, thrown at the operators in the US. And every time this becomes public, the market takes there's a shock to the market, and price takes a dump. And we've seen a lot of that. We've also seen some good actions. There's been there was a lawsuit against the SEC, and effectively this massive company, Grayscale Capital in the US, they probably run the biggest non-ETF fund in crypto, the Grayscale Trust, Bitcoin Trust. So it was one of the original big funds of Bitcoin. And they've applied to have their fund converted to an ETF. So there's this battle with the SEC to approve an ETF, a proper spot ETF, not a futures ETF. And that the judge in this case ruled that the SEC, in their quote, was capricious and arbitrary in the way that they refused Grayscale's application to convert to an ETF. It was just not based on proper fact and information. So this is good. It just, it could spell that the SEC is taking a softer approach, or might have to start taking a more lenient approach. And if that is the case, at some point we will definitely see an ETF in the States. And I hate to say this, but only if it's approved in the States will it really mean something to the market. And this will be some of the fuel, in my mind, that will, coincide with this 4-year cycle that we're in at the moment. So if it's a matter of time before the ETF is approved at this point. They're being, sorry, just to add this, the point that the judge found against the SEC was that they were being inconsistent, because they did approve a futures ETF. And the reason the SEC is giving to not approve a spot ETF is because of market manipulation, i.e. price manipulation. Now, that does not hold water, because it's the same price action that moves a futures ETF that also moves a spot ETF. So they were being inconsistent. And I think, they're being held to a higher standard now. So
again, a new market, all kinds of court actions and developments on the regulatory side. I've often heard it said, though, that regulations are wanted by the crypto community, if you like, because then you have certainty.
Yeah, look, I agree that there has to be a regulation. There has to be bodies, institutions, commissions that look after the investor. I think it's clearly important that investors should be protected to a certain point. We've seen lots and lots of scams, and most of these scams occurred because of the lack of regulation. So anyone can start a magical investment fund and take everyone's money and put it in a crypto trading algorithm. And so we all know the history of the biggest one we've seen in South Africa, the MTI boys. Now that would not have happened if regulation was in place. Now it's the chicken and egg. So at this stage, we are trying to catch up quickly. Our regulators are catching up, playing catch up, putting regulations in place. Things are definitely moving along swiftly in South Africa. So we definitely will be seeing a structure, and that is good for the consumer. So to a point where regulations should not stifle innovation, and this is what we're seeing in the States at this stage. So the US is definitely almost enforcing before regulating, and this is what's upsetting everyone so badly, is that they've not come out with their regulation, their rules, and yet they are taking the operators to court, which is ridiculous. Now, having what it is what it is. So regulation needs to be promulgated, needs to be published, and all over the world. It's in the process, and everyone understands the rules. Everyone becomes compliant. Investors are protected, and we're all good.
EasyCrypto was one of the pioneers in allowing retail investors to buy into cryptocurrency. As you said earlier, to buy a single Bitcoin costs you in the order of $20,000, which is outside of most retail investors' remit. But with easy equities and your fractionalization, you can go in there for 10, 20, 30 Rand. How have your investor base, how have the easy crypto clients, and you can tell us how many of them there are, been reacting to all of this news that we've been discussing?
When we started at EasyCrypto, inside the Easy Equities group, when the application of crypto was adopted, we started out with a bundle, which our position was that we don't know which one's going to be the winner. So would it be Bitcoin or Ether or any of the other thousands? So we took a position that we would diversify and put it into a nice bag of the 10 biggest cryptos, which we then did. That was called the EC10. It still is the EC10, EasyCrypto 10. Those are the biggest 10 coins by market cap. This was adopted received very positively. We were at that point, well, let me say this. We got to 100,000 clients under 6 months. So we're in excess of 100,000 at this stage. But what we've also seen is we've only been in this market for one cycle. So we saw the nice run up, and the run up the bull market was a little bit tripped. Again, if you believe the math of what the history showed us in these 4-year cycles, so it did sort of disrupt the bull market at the end of 20 and 21. But as a consequence of the peak, we saw quite a few of our clients take profit, which is not a bad thing. So we have not seen an exodus of clients, but we've definitely seen some disinvestment, which is great. So I have to applaud that. Our clients made profit, so they got out at the top. Shortly after the top, quite a few of them liquidated, and we have to admire that.
So, from what I understand, because of the cyclicality or the seasonality almost of Bitcoin related to the new Bitcoin that come onto the market, which is always halving, as you say, every 4 years, you are now looking for another run up in the price over the next year or so.
Yeah. So the next halving occurs in 2024. And so we are less than a year away from the halving event. Again, I have to say this, there is obviously no guarantee that history will repeat itself. There's a short history that points to the fact that this is a pattern. We have strong reason to believe why the pattern occurs. So that's the thesis. Now, based on that thesis, it will start in 2024 again, the run-up. Historically, it would start slightly before that, but it would then run up for about 15 months from that point and then peak somewhere towards the end of 25 in the same way that it peaked at the end of 21 and also 2017. So literally so far it's been the December every 4 years. So a good December every 4 years.
Well, it's certainly not going to make people who are invested in the EC10, those 100,000 people plus, feel bad about going into the Christmas period. Perhaps once more we will see this cycle playing itself out. Earle Loxton is the chief executive of EasyCrypto. I'm Alec Hogg from biznews.com.